Hi guys, this is Sonic here. Alright, it's time for Beyond with Sonic podcast series again. Okay, this time around, I will be very glad to present to you guys Mr. Joseph Lee from KL. He's from Malaysia, by the way, and actually he have a very good insight on EA and EA trading, algo trading rather, right? So I am very excited to present you that because I am sure we can learn a lot from him. Alright, hi Joseph.
Hey, Cal. Hey,
Hi.
thanks for having me.
Sure,
Thanks for
sure.
inviting me to your call.
Sure. Thanks for your response as well. Okay, all right, without further ado, Joseph, for our audience, right, can you tell us more about yourself, please?
Myself, by profession, I'm actually an ex-banker. I started off in the treasury department. That's where all the bank does all the trading on the currencies. That's the treasury department.
I see.
I was also involved in the international payments, global payments, cash management, and the technology deployment primarily. And by training, I am a software developer. And I actually enjoy developing business solutions, and I still do until now. So that's the cold blood that I am. That's
Mm.
primarily what I was and what I currently do as well.
I see. So, very it's great because you are good in both world, in my opinion. One is you are from the banking background. At the same time, you're also a you're also a software developer by training. So which is good. I mean, I'm sure we can learn a lot from you. Okay, just moving on, right? Okay, I'm sure you're from. You are in the trading industry and stuff like that. So how do you really start your trading journey?
Way back in the banks, yeah, I wasn't really trading. I was supporting the traders.
Mm-hmm.
I was primarily in the settlement. I know how all the traders settle their trades and support all their trades activities basically.
Mm-hmm.
But primarily for myself, I started trading about 7 years ago
Okay.
when somebody
Mm-hmm.
asked me to help develop an EA, an expert advisor on the MT4 platform. But back then I had not much exposure on MT4 because MT4 was very much a retail solution
Sure.
platform.
Mm-hmm.
But yeah, from there, I started the journey of developing algo trading robots. So to call it, we call it robot. It sounds a little bit more high tech, but basically they're just expert advisors and softwares that runs on the background as you know on the MT4 charts. The price get updated, it keeps on running and reacting to it. And somehow or other, I got pretty good at it because of my exposure with the banks and also, with all the trading methodology and style and how the banks manages their portfolio. I had a pretty wide exposure on that. So when people talk to me, the traders, I tend to understand what they were saying much better than most of the other software developers. So yeah, most of the software developers are not really in the trading industry, so it can be a bit frustrating speaking to them. But that's where my advantage was. I was kind of fortunate that I had exposure there, and since I was doing it as a hobby, and I develop it for people mostly for free. So subsequently, many of the Forex trainers and the traders came to know about what I do and asked me to help them to automate their strategies. And that's where it all started. When everybody comes to me and explain to me, because in order for me to automate their strategy for them, they have to explain to me. So I got a first row seat on all the different gurus, who had different type of strategies, and so I just learned everything from everybody, from all the different gurus, which was fantastic because after a while, I understand how to categorize most of all these different type of strategies and where they fit and how they overlap, and I get a bird eye view on what's happening. And from there, I moved on to developing for private fund managers. There are a lot of fund managers out there. So and also a little bit more for the asset management companies and family offices for the high net worth individuals, family. Yeah. So anyway, from there I learned a lot of types of different strategies from everybody, and then from there I just started to develop my own strategies because after you understand how how everybody works, then you tend to have your own style.
Sure.
Yeah.
Which is
Yeah.
great. Which is great. I mean, I just try to like when you was talking, I'm trying to like figure out like there's some kind of pointer that our listener can learn from. Is that I mean I mean by listening all these trader or trainer, try to articulate to you about their trading styles. I mean, it's good that you categorize them. You see, right? There will be some kind of trend trading, some indication trading and stuff like that. Am I right to say that?
Yes, there is. There are different methodologies, and they address. Yeah, and many of them addresses different parts of a trading model. When I say a trading model, I mean the entire holistic approach. There are many trading style or strategies that focuses very much on the entry. Some of them focuses very much on the win-lose ratio.
Okay.
A lot of them focuses on the money management. But to have a proper strategy, like what the banks does, okay, what they do is that they have a very wide scope. They have all the different aspects from the entry strategy, execution strategy, the exit strategy, and of course the portfolio management, which is your risk management strategy. So all this, so all this has to be in place to be considered as a full model. And the issue here is that there are a lot of these strategies, they addresses part of it. Some of them, they are very good. Like for example, they are using indicators. So they are basically an entry strategy, but they don't. Yeah. So they don't really focuses very much onto how the take profit, the execution works. So that is one of the very big problem with many of the strategies when taken as an individual part of the overall.
Yeah. I see. All right. Great. A lot of good insight. All right. Okay. What kind of what kind of mistake that, or what kind of initial obstacle that you have met when you're starting out, and like how do you get around it, or how do you overcome them?
There are actually two very important things I learned from the beginning. You can call them the initial mistakes. The first thing was that when I started off, I believed, or rather I thought that there is a strategy or a certain group of strategy that can be deployed for every single market. That means there's one strategy that works for everything. But the fact is that there isn't. Okay, the idea here is to know whatever strategy that we learned and from anybody, they are all good strategies. Certain gurus will teach this and certain gurus will teach that. Different types of strategies, they are all good. But the problem here is that we need to identify the strength and weakness for each one of the strategy. No, a strategy can never be deployed for all market circumstances and for all markets. So we need to know that under what circumstances will this particular strategy is good for, and what circumstances it is poor for. Under what circumstances will this strategy fail badly? So we need to understand that, and when we deploy that strategy on a particular market, then we have to understand, okay, this market is very trending. So there is no point using, let's say, a cost averaging strategy on a trending market. You simply die because it's not designed for that. So cost averaging is very useful in a ranging market. And if you were to, and if you deploy a trending market, trending strategy on a ranging market, then you will never get an optimized return from that. So the key here is to understand what type of strategy is good for that particular strategy that you're using, is good for what type of market, and find the right market to deploy it. The second one is actually curve fitting. Originally, I'm sure that there are people who have been playing with EAs, and they buy an EA and then they started to think that, okay, there are 50 different parameters, and they try to back test it and try to fit it using the the previous data, market condition, market data. And then they say, oh, I found one that works, and then they deploy it. But the problem with that is that that's called curve fitting. Curve fitting is a very bad thing. You're trying to optimize your parameters to a particular market. But the problem with the market is that it's never the same. Market always change.
I agree. So, I mean, they are not entirely the same. They can be slightly similar, but they are not entirely the same. I agree with that.
Yeah. So that becomes a big problem because what we did with the curve fitting was that we designed or we forced that particular algorithm to work in a certain market, and then when the market structure changes, it will fail. That is why a lot of people who uses EA will say is that, oh, it works a little well for a while, and then subsequently after a while it all come crashing down on them. So that is the problem with the curve fitting. So these two are very important insights that I learned from the beginning.
I see. So it's just to prove that, like, if the person hand it over to you or sell you a indicator, right? For I mean, for our new audience, right? They sell you the indicator and stuff like that. Then they can prove you that it was worked for maybe for a past few years as per the historical data. But doesn't mean that, right? It's gonna work in after the person purchased a particular EA, right?
That's for sure, actually. The general rule of thumb is that if an EA can be purchased, it's never good. I mean, look, why would I spend months to create a program that will make me millions of dollars, but I sell it for $49.90 or even $499.90 or $4,990? Why would I do that? I mean, I could just use the EA and make money by myself, right? Some of them will. Yeah, and a lot of them will come back and say, oh, because I don't have that much capital. But that's just because if you are good with trading, I'm very sure that there will be a lot of people who are willing to invest in that. So that argument is actually, that argument doesn't really work. Yeah, so so all these EAs that most of the EAs, I won't say all, most of these EAs that we can find and we can buy from the market, they work. Yeah, and if there's something that
sorry, I need to ask you again. What do you say about your most of the EA? Can you say that again? Sorry, just now I was interrupted.
Most of the most of the EAs in the market doesn't work.
Okay.
Simply because if it is for sale, it doesn't work. If it works, their chances are they're proprietary. They won't be put for sale. Yeah. So no matter what they show you, all this back test 10 years data, 15 years data, 5 years data, it doesn't really mean anything to me. So when somebody throws me an EA and says, okay, look at this past result, I wouldn't even bother looking at past result. What I'll look at is I will try to understand the strength and weakness of the strategy and look at its trade and how it trades. Then I will know whether what kind of market condition it is for. So that will give me a much more solid gauge on whether that particular EA is good or not good. And of course, there's one more thing to watch out is that any indicators, I'm not sure if you agree with me, indicators are always lagging. So if trading if a trading strategy which uses an entry strategy solely and that is based on indicators, basically something that you want to avoid as well. So there are generally, there are not many winners out there, just like any other businesses out there.
Sure. Awesome stuff. Thank you very much for pointing out on that. I would like to move on. All right. So just now you were talking about like we shouldn't be using like a cost average in the trending market because it should be more on the ranging market and stuff like that. So in your opinion, how many types of EA are available in the market? How many types can we just categorize them in a way?
Oh, that's a very difficult question because generally speaking, as long as you can think of it, you have wrinkle bricks, you have stochastic, you have scalpers, you have Martingale. There are just too many. But if you think about them, trying to categorize them, they all try to fit into one side that says that they're entry based.
Oh, entry based.
So entry based, So they have like MA crossover, the EMA, and then when it crosses and then the breakout. So when that happens, you enter, and when something happens, then you exit. So they are all what we call an entry strategy, and that's all it does. And when you look at those EAs, they don't really try to figure out things like, what about your portfolio management? How do you size your trades? How do you know when to exit? How much to enter? They are all based on a particular entry. So that's why I was saying earlier on, to have a proper trading model, you need to have more than just entry strategy. You need to have that.
That's right. So
Yeah, you have to have most of them.
entry,
Just
win-rate ratio. Sure.
Yeah, you have all those. Just to give a little bit of insight on how banks work. In a bank, as a trader in a bank, yeah, back then, now you are not allowed because of the Dodd-Frank Act. Back then, if you are a trader in a bank and if you are 55% accurate, you are considered as a good trader.
Sure, sure.
If you're 60% of your trade are right, you are like legendary. So you see, the point here is that the entry strategy is great, but it is not everything. It doesn't really decide your entire portfolio. It's just part of the entire thing. So imagine if a trader can be profitable at 55% accuracy. Then we are trying. A lot of times, I see a lot of traders, they try too hard to try to find the entry strategy,
That's right,
the right entry strategy.
That's right. That's right. Joseph, when you were talking, I can't help but smile. Thank you very much for bringing up. you know why I'm laughing, because there are few joker on the internet, right? They're just trying so hard to prove that how how accurate their method is. All this kind of stuff. Yeah, you're right, man. I mean, if it's the whole thing is not about. I mean, at the entry itself, I mean, like you said, you have a very good background on the banking. You say it already. It's even you got a 60% winning rate. You're considered very good already, because the real money were coming from your risk management, loss sizing, this kind of stuff. Am I right to say that?
Absolutely right.
Because I mean, like, because I'm dealing with all kind of new traders sometimes, right? I mean, I can't blame them, but their expectation is kind of like, their question can be kind of like it's not valid in rather, because they will say, Joe, what is your win so-called hit rate, or this kind of stuff. Yeah, I mean, I mean, if they know all this underlying and how this whole thing works, they will not be asking about hit rate and stuff. Like, they were more about, because you can even the person with a very low hit rate, he can make a good money, because when he wrong very little. When he right a lot. You see, you're right, man.
That's right.
Thanks for bringing.
That's right. It's all about putting the whole thing together as a package, instead of just taking part of it, one part of it, and say that, I'm very good at it and I want to focus on that. It doesn't work like that. It has to take out as a whole package.
Cool. All right. So just now you talk about this like entry kind of method, EA. Okay. Joseph, would you mind if I ask you one question about, okay, I also have this kind of idea toward EA, because I agree with a lot of people that, I mean, there are some quite an experienced trader that they keep on mentioning that a lot of EA are more like a Martingale type of EA. I mean, like, you got what I mean, Joseph? Like, they I mean, they are the total opposite of entry type EA. I mean, they don't really care about entry at all. Actually, they don't care about anything at all. Actually, they just randomly, almost randomly, they just randomly enter a trade, and they don't use a stop loss. You know what I mean? Then, like, they try to buy time, or they try to so-called pray or whatever. When the market go in their favor, that they close. So it's like, this kind of EA are very obvious. When they look at their so-called their PNL is a one-way street up. You see. So okay, can you talk a little bit more about EA? Okay, I will keep quiet now. Yep, thanks.
That particular type of EA, Martingale.
Yep. Yes.
Okay, Martingale by nature itself, was rather designed for casino. Basically, it's for the bankers and the player casino game. Now, in principle, Martingale has a very big difference compared to cost averaging, as in the Martingale tends to increase the size of the trade exponentially by a lot. Okay, and what Martingale strategy, or I would call this, I won't shoot Martingale, because there are some good Martingale programs out there. You see, the thing here is that the difference here is that the primary difference between a Martingale and a normal, let's say a normal trading strategy, is that the normal trading strategy is trade based. That means I look at something, I predict it is up, or I predict that it's going down. So it's a very predictive strategy in a normal. Whereas Martingale, or I wouldn't call them Martingale, I categorize under what is called a set-based trading strategy.
Okay.
In a set-based trading strategy, you take multiple positions and glum them up together as one whole.
Sure.
Okay.
Sure.
Now, Martingale is a very, very aggressive version of set-based. The more proper way to do it is actually with cost averaging or price averaging or time averaging. There are different type of averaging. They all fall under the averaging. Now, these are not bad per se, because and what it is betting on is not about the direction, predicting it up or predicting it down. What it is predicting is that the market will range within this particular range. Let's say 150 pips up, 150 pips down. So that's what they're betting. They're not really betting on the direction. But if the market goes beyond that, that means if it's ranging, then all this will die very, very quickly, especially Martingale, because the subsequent sizes are very, very big. Yeah, but if we do this this mechanism, this set-based type of strategy properly, which is cost averaging or averaging type of strategies, they can be very, very useful. I personally am a set-based trader strategy, where some of my EAs have been running for years, you know, without interruption by itself. So it's all about how aggressive you are and how much of the trading range that you're working on. If your EA keep on increasing in size and doesn't have any other ways to stop it, then it is a very, very bad EA, very bad strategy. If you want to have yes, so you need to, for example, if you are looking at Martingale or set base, first of all, the first question you have to ask is that, what is the trading range? That means if you start today, what is the maximum range you can take before your account will burst? Okay, so you have to identify that, and you look at that particular instrument, the market you're trading in, let's say euro, dollar, okay, and you look at it and say that, okay, do you think that the market in the next, say, 6 months or 1 year is going to move more than one direction, that particular size? If you think there is, then you shouldn't be using that strategy. Then you should be using something else.
Sure.
Yeah.
Great, awesome. Because thanks for your clarification. Because as I said, I spent too little time on the EA, and it's a great time for me to learn as well. Thank you very much for that. I agree with that. Is that Martingale can be loosely translated as a set-based strategy, but the problem with Martingale is that they aggressively they aggressively increase the size especially when they are not in the good shape, right? Because the market can trend, market can trend maybe a pretty significant, pretty extended amount of times. All right. So
and if you're using this type of set base, you have to understand that you shouldn't be, or rather we shouldn't be having too much of an expectation. These are what we call slow and steady. So expect very small profit, but consistent. Then you will be a lot better off than trying to size it like a single trade, where you open a trade that is so big, and subsequent trades will get bigger and bigger. So that is a very, very big mistake. If you want to use this, size it very, very small.
Very small.
Very, very small.
I see.
Very small.
I see. All right. I mean, I trade very small as well. I mean, compared to the account. I mean, of course, if a person use 2% per trade compared to a person with $100 and compared to the person with $1 million, but they may trade the same 2%, but of course the amount can be different, but still a small amount. Is it 2%, right? So I will totally agree with you on this one, because I mean, I can see from a lot of new traders having a problem is that by have a proper cost averaging and chopping your position into a smaller portion. What's the main problem is that a lot of new traders especially, they tend to get so-called whacked around pretty fast. I mean, like, they enter a trade with rather a big size compared to your total account size. What happened? Maybe they put like a stop loss, like maybe let's say 20 to 30 pips, right? So what happens is that market, let's say they buy, market just go down 20, 30 pips, they are out, then they don't know what to do. Okay, then they follow again and they sell again. Then the next moment the market go up again and go back to their initial direction. You got what I mean? So it's like, yep, I
Yeah.
think cost averaging is a proper, and I think it's a proper, and uh I think it can help people from busting their account actually, rather, instead of,
Yes.
yeah, because people
Yeah.
see
But one of the
Mhm, mhm, yeah.
Sorry, I just wanted to add a little bit that one
Sure.
of the major problem here is that a
Mm-hmm.
lot of the traders, the
Mm-hmm.
new ones,
Sure.
tend to make this mistake where they enter a trade
Mm-hmm.
without deciding that they are doing a cost averaging from the start. You
Sure.
see, so they enter a trade at a
Mm-hmm.
size that is relatively larger,
Mm-hmm.
and when it goes against them, then they decide that, oh, I want to cost average it. Now that approach is wrong,
Wrong.
because a cost averaging approach is something that you need to decide before you place a trade.
Sure. Sure. Awesome. Awesome.
So yeah,
Yeah.
so that is a very, very important thing.
Sure. Sure. Thank you very much. Wow. Wow. You just made my day, man. I mean, this is really gold for all the new. I mean, not only the new trader, all the trader actually. Thank you very much for that. Okay. All right. I mean, you have just answered what I want to ask it as well. Okay. So moving on. All right. It's gonna be a walk in the park for you, man. Okay. All right. So you are started to do this programming, and start to code EA for the fun stuff like that. So on your own, okay, what is your aha moment? I mean, like you become more and more confident. When was the time that made you become more and more confident in your trading? What is your aha moment, please?
My aha moment, I presume in this case, is when I got why would I want to go back to a 9 to 5 job when I can trade? You know, yeah, I mean, I did that for fun from the beginning, and subsequently, I just realized that, hey, I can be trading this full time. I don't have to sell anything. I don't have to have a boss. I can be doing this on the beach as long as I have an internet connection. I could be. I know I don't have a supplies problem. I don't have to go out. Last time, I used to be going out to try to bid for projects, for IT projects. I have to go around, begging people for projects. In trading, I don't have to, and I have instant expansion. If I've got more money, I can expand my business immediately. If I have less money, I can shrink my business immediately. So then it hits me and say, hey, this is the type of lifestyle, and this is the type of job that I want. And it's something that it helps me with my lifestyle, because my lifestyle improves, and also there are a lot of people who works, and then the problem with that is that they need to defer their gratification. For example, if I want to enjoy something, I need to save enough money before I can enjoy it. But the fact that if you're good with trading, you have no issue with finding a sustainable income. So you don't have to worry about not having money in the future. You can just have more instant gratification, rather than having to save for the next 10 years before you can do something with your life. Yeah, so that kind of like hit me, and then they say that, hey, this is something that I want to focus on. And the fact that with technology these days is something that I really, really believe that going forward, technology will take over the world, and which is already happening these days.
Sure. Especially by like HFT and stuff like that. I mean, in the lower time frame, nobody really trade anymore, right? It's all taken over by all by the machines and stuff. Yep.
Yeah, that's for sure. Especially in equities, don't bother trading.
Yes, exactly. I kind of like see that those people who trading on the floor in the New York Stock Exchange. I think they are more of the show. I don't think.
To be very honest, these days about 78% of the traders, the trading volume here has been removed. These days they are more towards algo trading these days. Those guys on the floor are more on the institutional market. That means between banks, asset management companies. So they handle those rather than the actual trading.
I see. Great insight. Okay, just moving on a little bit. Okay, so I understand that you are more on the cost averaging trading stuff, which is more like a set bay rules. So should I like put you into like because normally I interview mostly like a technical trader, right? Or I would say manual trader. So what kind of style that should I address to? Like like you are scalp trader or swings or something like that? Yeah.
Kind of like hybrid because it really depends. But definitely for sure, I'm not a scalper. I don't believe in scalping because the amount of fees and spread that you lose to a broker is
very great one as well.
It doesn't make sense. I prefer swing trading because I'm getting old, so I don't have that kind of energy to be looking at the chart on the H1 or H4 kind of thing. But generally, because of the cost averaging, some of my trades can go over days or months, where I'm holding on to them. But if there is a situation where the market is moving very quickly, for example, non-farm payroll, and I'm in the market, I could be trading very quickly as well on towards, let's say, the M15 kind of level. Yeah.
I see. So is it something like because you run EA, right? So what is happening is that do you host your EA on your computer, or what kind of execution do you do?
I have a server farm. Actually, I have a server farm of my own, where I have an actual physical server, and where I slice it into various servers, multiple servers, where I host all these different robots.
Sure.
From if you were to look at all these methodologies, you can consider me as a price action kind of trading style, because I don't look at the indicators primarily. I just put it there for nice show and give me a little bit of guide, but generally I don't use indicators in all the algos. I use only two indicators. One is FIBO, and the other one is the support and resistance. I believe that these are the only two indicators that are not laggy, and they are able to predict.
They are more like a predictor. Exactly.
Yeah, so all other indicators are laggy because their value is derived from the previous value, and they doesn't predict the future value. So these two, to me, they are the only two that give me a guide of what the price will be going forward.
Sure. Okay. All right. So, do you have any particulars like products that you trade across the board, or do you trade certain products or certain instrument only?
Generally, because of the averaging, which I do a lot, and averaging tends to prefer a more ranging market. So these type of ranging markets are like dollar chef, because they dollar chef Swiss franc basically. Dollar Swiss franc is a very mild and controlled, rangy kind of market. That's why I like it, because of that. By extension, I also like euro dollar, but euro dollar tends to have this breakout of where it is inversely correlated to dollar Swiss franc, but it has its certain tantrum, where you can go ranging, trending for a while. I also trade Dow Jones, where it is very fierce trend. Gold, I play with gold, and also with cryptocurrencies like Bitcoin, Ethereum as well.
Sure. All right. Okay, so you have quite a basket of them, actually. So mainly on the CHF, US dollar CHF, and a bit on the euro, yeah.
Yeah, but the key point here is that most importantly is to identify the market that is suitable for the strategy you're in. So it doesn't really matter what market you are in, as long as you know the strength of your strategy. Then you look at the market and say, okay, this market its structure is like this, so it's suitable for say a rangy type of EA, or is very good for trendy kind of EA. So you just apply the right type of EA to the right type of market. That's the matching part.
All right. Okay. This is a little bit personal. Okay. Can you tell me more about your recent best trade, and how about a little bit about your worst trade as well? Yep.
Yeah, that's a hard question, because like I said, I operate mostly in sets, in sets of trades instead of individual trade. But you could look at generally a good trade for me is approximately 100 to 150 pips, which is very, very mild compared to many of the traders who does one single trade. And that is, approximately maybe about 1.3% of the account size in terms of profit. That's pretty mild. And the worst trade was the recent Dow Jones crash. I'm quite sure everybody woke up to that. It took out, took 40% of one of the account that he was operating on, because it was supposed to be very aggressive kind of EA on a trendy. But all this, you know, you need to put into a overall portfolio context, because by having somebody come and tell you that, hey, I made 5,000% or 2,000% or 200%, it doesn't mean anything. If you look at the overall portfolio, where there are certain different algos working on different markets and handling different amount of your overall wealth. Let's say you have 1,000 bucks. Okay, you get 10 different traders, in this case the EA robots, and each one of them you give them a percentage of it and you play around. So obviously the safe and slow and safe type of trader, or which is a EA, you assign them a bulk of your portfolio, and wants it to be slow and steady. Whereas a small percentage of them, you put them into high risk. You know, if they die, that's where you make some. That's right, exactly. High risk, high return kind of strategy. So very importantly, it's not so much about a per trade kind of thing. You have to look at it from your entire portfolio, which is an entire topic by itself, portfolio management.
I see. All right. Yep. I like to hear that, like, you talk a lot about like looking the whole portfolios in the, because I can see that a lot of new trader, or even some of the seasoned trader, they have no idea at all. You know, they just live from trade to trade. You see, so it's like, which is not really healthy. Yep. You have to look from the portfolio, I mean major portfolio point of view, like you just mentioned, like, you know, you just have to, as if like, you know, your strategy are just like your employee, right? One guy will be slow and steady, one guy will be a bit more, you know, see chong type, you know, this kind of stuff, you know. So it's like, of course you have to arrange your, because I mean, too aggressive can be good and bad as well, for sure. All right. Okay. Let me move on, Joseph, a little bit. Okay. I'm sure every trader have a plan, including myself. You know, there are certain things that I'm working on as well. So how about you? What kind of improvement that you would like to see in your trading?
Going forward, I mean, I've been in algo for many years now. When I started off with algo, a lot of people tell me that, hey, you know, computer is not going to trade well. The human will always be better. And everybody tells me, no, it won't work. And now today, a bulk of the global trade is actually done on algorithm. There are a lot of hedge funds in the world, international large hedge funds that handles over tens or hundreds of $billions. They are based on algo these days. So technology is definitely going to take over the world, and that is where I am focusing as well. The next step that I'm working on towards is actually to integrate artificial intelligence, specifically neural network, into the algorithms. Basically, within this 1-2 years, I'm working towards building a so-called artificial brain, where it does study the previous data, come up with a model, and by itself it will be able to predict and pattern match the market structure by itself. So so that's the AI part of it, and I strongly believe that going forward, humans will be trading against AI or algos or robots. And that is also why I believe that as a human trader these days, I strongly suggest that you guys use tools, find tools. It is a little bit like if you want to fight, you know, in the Marvel superheroes, you want to fight a big villain. If you're a human, no matter how good we are, you know, it will be a problem, you know. But if we deploy the right technology, like for example, you're Iron Man, you wear the right suit, you have the right technology to help you, then you stand a very good chance. But if you're just going out to the market barehanded, chances are you come back bruised up. But going forward, that's what I believe in. But the ultimate holy grail that I'm trying to work towards is actually to find a mechanism to predict the market structure change. Let's say, for example, ranging to uptrend or uptrend to downtrend before it happens, and that is where the AI, I believe, is going to do that trick. Because, like I say, all the strategies, different types of strategies I see in the market, they are meant for a particular type of market structure. And if we are able to identify the structure change, that means a change from a downtrend to an uptrend. Okay, and from there we will know then when to deploy the right strategy. That will become the holy grail.
Sure.
Yeah.
Okay, awesome.
I'm working towards that. Yeah.
Sure. All right. Okay. From your point of view, okay, because there are a lot of new trader keep on popping up and keep on coming, joining to the race. Okay, if there's a lucky few that happen to listen to our podcast, right? What kind of advice would you like to give him? What kind of advice that he should, what kind of skill that he should equip with? Yeah.
Stop looking for the best strategy. There is no best strategy that works on all market conditions.
Sure.
The same strategy that worked 6 months ago may not work now,
Okay.
simply because the market structure changed. So don't be stubborn. Understand the strategy that you're using and find the market that is suitable for it. So don't keep on saying that, oh, I've been trading EU and with this strategy, and I will keep on fighting the market if it's going against me. If EU isn't working out with the strategy, move on, go to GU or something like that. I mean,
Sure.
no, don't fight with the market. Yeah, that's one. The other one here is to separate your overall portfolio. Very importantly, if you want to be in this game for long, okay, if you want to be in the long term, you have to have a portfolio where you have certain strategies where this is a slow type and bread and butter, and allocate bulk of your fund to it. And you will also need a high risk, high return. Don't be so gassy, and say that, okay, I don't want to take any risk. That doesn't work as well. So your entire portfolio has to be balanced between a safe and a bulk of it and some high risk, high return type. And that's where the overall thing will grow. Some of them you make some of them you lose some. Your market will take back some from you. That's normal.
Sure. All right. Okay. Because I'm sure like you have an interview or you have talked to a lot of trader, a lot of guru or a lot of trainer, right? From your point of view, what kind of the quality, all right? What kind of quality or what kind of composure or what kind of quality that the person should have to become a good trader? What kind of quality that he must show?
Emotional control, calmness. That's very important. I mean, to be very frank, trading can be very stressful. Market can go against you or market can go with you, and where you become very aesthetic. When you get too excited, you tend to make mistakes. When you are very, very sad, you tend to make mistakes. So the ability to stay calm is the number one most important character a trader needs to have. Your ability to control fear and greed. These are the two worst enemies a trader will come into contact with. We will always make some and we will always lose some. Sometimes we take from the market, sometimes the market take from us. It is all part of the business. Have a realistic expectation. Don't think about, well, okay, I will come in and then I get rich quick after I paid a $5,000 cost. I mean, this is one of a very, very, very common thing I hear a lot from new traders. They pay $5,000 and a tenner cost for 1 week, and then they come back to expect to be able to retire for the rest of their life. That's absurd. I mean, even if you pay $10,000 to go attend a let's say a bread pastry cooking class, does that make you a good cook after that 1 month? It doesn't. Even if you sit down with the best swimmer in the world for 1 month and you go back, does that make you a good swimmer? No. It doesn't happen. You have to have a lot. You have to practice. These guys have spent years and years and years doing it. So you don't expect to pay $5,000 and come back and become a super trader. It doesn't work like that. Don't have that expectation. So just stay calm and have a realistic expectation.
I think in trading, even the person pay a 5K a course or something like that, then after that, I think that the things that they really need to take time to acquire is experience as well, right? Because they need to get a feel of it, and they need to understand how the market normally move and stuff like that, right? Because you can be a good trader overnight in most cases actually.
For sure. Just like I was saying, the example, you cannot be, even if you talk to the best swimmer in the world, you talk to the person for 1 whole month, and then tomorrow, the next day, you jump into the swimming pool. You can't swim. Simply because you did not practice. You need practice. Talking to the best trader in the world, won't make you a good trader. You have to practice. That's the most important thing.
Sure. And I would like to emphasis on the trading is not really a good rich. I mean, get rich quick scheme, right? Like you said, you must have a proper, especially because recently I've even come across one of the guy in the internet just showing like he got a $50,000 and within 3 months or something like that he made like $300,000. I mean I mean like it's possible for sure, but like the things that he's not mentioning is that like the way he mentions like it's like very easy. You got what I mean? Like
Yeah, of course. They
I want
they
to
can
laugh,
show that to you.
yeah.
Yeah, then very simple. I'll talk to you again 8 months down the road.
Yeah.
Yeah, sometimes people can be lucky, but you can
Yeah.
never be lucky all the time.
Exactly.
If you want to be in a long, you're going to be in this game for long, you can't base on luck. It has to be based on skill.
Sure. Because what these people are missing is that they don't talk about how much risk they have to take just to
Exactly.
get this. Yep. All right. So because like you said, if you are in for a long run, yeah, of course you have to pay attention to risk exposure as well. Yeah.
Yeah.
Sure.
Yeah.
Okay. All right. Just quickly moving on. All right. So we are in the early stage of 2018. So what do you think, bro? What's gonna happen in 2018?
This is the $1,000,000 question. This year, I think 2018 is a very volatile year because of the Trump tax cuts. There are a lot of bond interest rate hikes kicking in. So there will be a lot of volatility. And I basically think the global equity market will continue its uptrend, but with a lot more volatility than it used to be. Previously in Dow Jones and all this Nikkei, you can see that it's basically one-way street. Now I would think that it's still going up, but there will be some trenches of downtrends. I believe that gold will continue uptrend. That's one of the key things. I believe that crude oil will go sideways, not going up and not going down, probably just go sideways. Notice that I'm not saying that it is a good buy or a good sell, because all this is just a matter of whether you're catching in the right direction. If it goes down, if you're shorting it, then you'll also make money from it. So this is just my view. Crude oil is going sideways. I believe that the cryptocurrency, a lot of people are interested with it. It will continue its uptrend, even though there are a lot of regulatory concerns kicking in, which is stopping its prices. But once the regulatory issues are ironed out, I believe that it will continue its uptrend. And I believe that the US dollar is going to go sideways, taking a break from its downtrend. Maybe a little bit of bias upward a little bit. It won't continue its downtrend. That's what I believe in.
Sure. So in general, you are a little bit bullish on the equity market, yeah, for the
Yes, I am.
Sure.
Yes,
I agree with you on that, because we have more and more signs of inflation. Of course, gold shall go up, Dow Jones or like equity shall go up as well, right? Okay.
Yes.
But I don't think crypto will be like, for example, like just what happened on the last December. They go a few percent every day go up. I don't think it's gonna happen anymore, right? But of course they will go times. Yeah.
The Bitcoin is going to be difficult because it has already joined the futures market. The futures market is basically the mainstream market. We used to be Bitcoin is operating its own world. It's a small market. Okay, you talk about 300 billion. What is 300 billion in global FX? We trade in like $4 trillion a day. So when it goes into futures, it is exposed to the world, and the world will have a much more stronger ability to control its pricing. So I don't think that you'll boost up like 10,000% a year, that kind of thing. But I still believe that it's going to go up in a very exciting percentage term, but not a 10,000 kind of thing.
Yeah, not like what happened on the previous, because.
No.
I have a sad news that I have sad to see that a lot of people get trapped on the higher price of the market. You see, so it's like I just want to warn people that those days are over. Yes, crypto will go up, right? Crypto will go up, but for what I want to mention is that it will in the proper fashion already, more like previous, previous movement.
Yeah.
All right. All right. All right. Thanks
Yeah,
for
but
that.
I'm still optimistic of that. Yeah, I'm
Sure,
still
sure.
optimistic.
Joseph, actually, I'm slowly buying some crypto now as well. Actually, I have a, I mean, I previously I speculate, I trade CFD and stuff like that. Currently, I have
Mhm.
I buy in some crypto, slowly accumulating some of them. But I also want to, one thing I want to add on is that, yeah, what kind of crypto shall we a bit more focus on? Because there are thousands of crypto. That's why, like, I don't think most of them will
Yeah.
survive as well. If I'm not wrong.
No, no. If we look at the crypto industry, we are
Mhm.
diverting a little bit. Yeah.
Sure.
It is very similar to the year 2000 .com boom and the
Sure.
.com burst.
Sure.
99% of all those counters back then disappeared. I believe the same thing will happen because if you look at all the cryptos can be generally divided into three types of cryptos. The
Mhm.
first one is asset based, asset backed. Okay,
Mhm.
that is they are backed by say US dollar, backed by
Mhm.
gold or something, and
Sure.
then you have the utilities, which
Okay.
is the currency, the actual currency, because
Okay.
they are used for
Use
purposes.
for.
And the bulk of all the cryptos out there, they are what we term as security based, meaning they represent basically the share of that particular company. And what you're holding is not really a currency. You're holding the share of a startup company. Yeah. So
They call it
most of
ICO, right?
yeah.
Ah.
Yes, exactly. They call it ICO, which is basically your whole. They come out with a token, a currency, but they are basically, in a layman term, they are shares of that company. So you're not really holding a currency.
Yeah, but
If you look
they are
at
riding on the wagon of crypto. I mean, they call it ICO. So I mean, these are just actually they are just what we call it they are not a proper security. You see, right? They don't have enough so-called credential to go to the proper stock exchange to be listed. So they just come up with their own ICO, right?
they are, just imagine they are fintech startups,
Yeah.
technology-based startups, and
Yeah.
you're investing in
Oh.
their company.
Yeah.
Yeah. So if you look at the 1,700 plus or 1,800 tokens out there, maybe 10 to 20 are actual currencies. The rest they are not currencies. So if you really want to bet on the cryptocurrency per se, just focus on the currencies. Things like Ethereum is good, like coin. I mean, I'm not going to make a call here. I'm just giving examples of
So
what
Ethereum
currencies
is
are.
considered like a utility? Is it categorized under utility?
Yes.
Sure.
Roughly, yes, you can say that. Yeah, Ethereum is going to be the next current adopted mass adoption. So Ethereum space is very, very exciting. So I like Ethereum a lot.
I see. Yeah, thanks for bringing you up this security ICO, because basically they're just riding on the name of the crypto. Actually, they're nothing to crib about, right? They're very basically asking you to buy their company, their maybe a dodgy company that it's something like a Ponzi,
they are good. I mean, to be very honest, they are good companies and bad companies. I won't say all of them are bad. Some of them are actually good ones. Of course, there will be bad people who uses it to cheat other people's name.
Exactly.
Yeah, so we have to be very careful when we invest in ICOs. If you are not in the game, I would suggest that you skip ICOs because it's a very specialized. You can make money, but you have to be very, very careful. Yeah, you have to know the good. I'm part of a Kyber network, which is a company, which is an exchange in the cryptocurrency space as well.
Sure.
Just for disclaimer.
Cool. Okay, I think I need to so-called dive deeper into crypto, because I got an understanding that crypto normally I understand those like utility kind of base, because they are used to exchange of goods and products, right? Yep, I'm skeptical about this kind of security ICO, because to me, if the company is good, why don't they just go direct to the
ICOs are a way for these people to start a new company, to raise funds to start a new company. So basically, they have a business and the business idea.
All right. Yep. Thanks for clarification, Joseph. Thank you very much for that. All right. Wow, I think this is one of my longest interview, I suppose. Thank you very much. I learned a lot from there, and I'm sure a lot of my listener will appreciate what you have shared so far, Joseph. Thanks a lot.
Thanks.
You just make our, you just make our view clearer on the in terms of EA, in terms of how a proper EA should be like. Like I repeat, not only because most of the EA, like you said, like they only care about the entry. Then after entry, do what? You know what I mean? So it should be more like
exactly.
more like a money management, entry and win rate, so-called proper loss sizing and stuff like that. And another one that you made very good point that you're mentioning is about the set-based kind of trading. Yeah, I totally agree with you because a lot of people because a lot of traders are drawn. I mean they got drawn into the war of volatility. You see, they buy with a very tight stop loss and very big loss size. Just a big move that whip them out already. So market is usually doing nothing, just a bit of swinging here, swinging there. But in reality, they are being chopped all the way in the market, right? So I agree with you on the set base. So that you must have a proper set base. I mean, set base is to prove to the trader that you will never get at the exact point, right? You have to have a proper set. So certain pip away, you will add in again and stuff like that, right?
Yeah, it is very good for fault tolerance. We make a lot of mistakes. Set-based strategy allow us to make mistakes and yet still exit the whole set in a profitable manner.
Exactly.
Yeah.
Exactly. And you also mentioned a very good pointer. Of course, I'm on your side as well. You don't really believe in indicator because indicators are so-called lagging by nature. You are more on the FIBO and the support and resistance, which is very cool as well. All right, and you talk a bit more on the crypto because we discussed further. So thank you for that. You mentioned about the mainly three types: asset base, utility, and of course another is securities. Of course, I would like to say that try to avoid those security based crypto. They are nothing but a share actually. I mean, unless you really know the particular company well, right? They have a proper fundamental or proper growth potential, then you should be in. Because what I worry is that a lot of people don't aware of that, Joseph. Crypto, they just want to buy. They don't really know what they are buying actually.
Yes. Then that is very, very dangerous. Whatever we do, we have to know what we're doing. If we don't know what ICOs are, don't get into it. Just like trading as well. If you don't know what trading is, don't get into it.
Sure.
Don't jump in because there's something we call fear of losing out, fear of missing out. Don't go in because of a
Sure.
Yeah.
Mm-hmm. You can detect that in 2017 late 2000. Wow, fear of missing out. Everybody jump into crypto. Yeah. Then I think I mean now these people are quiet now already. Okay. Anyway.
Yes.
Yeah. Anyway, I'm sure now if they're listening right now, I'm sure they must be thinking, I should have listened to Joseph earlier. Now
no, don't take me wrong. Yeah.
So
I'm still optimistic. So yeah.
Sure. So like they might be, wow, this interview is 3 months late, Sure.
Okay.
All right, I agree with you on the bullishness on crypto. I think crypto is more like shaking people out first. Those they are shaking those weak hand or loose hand out first. I think eventually they will get stronger and they will gradually appreciate, in my opinion. Okay. Thank you for that. Thank you for your time, Joseph. All right.
Thank you so much.
There will be. I'm sure a lot of people want to find out more about how you do, who you really are, and stuff like that. Is there any way they can so-called contact you or they can find you?
Yeah, you can always anybody can always FB message me. Or you can try to add me as a friend. But please understand that my FB page is my personal space. It's not like I'm using it for professionally. It is with my family, so I may not be able to add everybody to the friend list. So I hope you understand. Yeah, you can always follow. Yeah, that's right. Yeah.
All right.
Or you can Skype me.
Sure. Oh, okay. For Skype, right? Okay. I will. Okay. What I suggest is that whoever want to get in touch with you, I think maybe they should follow you first, and they should send you the PM so that you can give them your Skype number and stuff like that. All right. Skype ID.
Sure. Yeah. Just FB message me. Yeah.
Sure. Okay. It'll be a pleasure, Joseph. I learned a lot from you. All right.
Thank you so much, Gal, for having me. It's an honor.
It's my honor, sir. Actually, it's my honor. All right. Okay. Thank you very much. And Joseph, you hold on for a while. All right. Thank you.